Hey guys, it's James again, and I wanted to do an in-depth review comparing QYLD versus QYLG. This is Global X's NASDAQ 100 covered call ETFs, and the QYLG, and that G stands for growth. So there's a 50-50 split where 50% of the fund is covered calls and 50% of the fund is allowed to grow with the market. So we're going to discuss the reason why QYLD is currently underperforming QYLG. So if you take a look at the graph here with all the numbers inputted, QYLG over the next 10 years, if it continues the trend, the NASDAQ 100 continues its trend, QYLG will significantly outperform QYLD. And I also want to talk about why you still might want to invest in QYLD over QYLG. So let's get into it. So we head over to Global X's website and we can compare the QYLD versus QYLG. So they both follow the NASDAQ 100, but the QYLD, and I believe the D stands for dividends, where the QYLG still pays you a dividend, and we'll get into how much it pays you, but they have a 50-50 split where 50% of the fund is for growth. So what they do is they write call on 50% of the portfolio. The strategy allows the investors to capture half of the upside potential of the underlying index. So first off, Global X has 5 different covered calls right now. They call it their covered call ETF suite. I believe they have some other risk managed funds as well, but here are the main 5. So we're looking at QYLD and QYLG, and all of the options are at the money, but QYLD is 100% covered call and QYLG is 50% covered call. I'm not going to sit here and make it sound like I know everything about call options, but what I could find, they also have a document on their website explaining what their covered call strategy is. I reviewed this document and I came down this graphic here, and I think this explains it really well why QYLG is currently outperforming QYLD. If you look at the NASDAQ 100 graph over the past year, it's in a bull market right now. This 15,228 is a 25%. No, excuse me, that's a 19% growth over a year ago. So right now the NASDAQ 100 is in a bull market. So if you read this little bit right here from on their covered call strategy explained document, it says in a bull market where the NASDAQ 100 is in a bull market right now, an investor will likely underperform the market as they keep the option premium but forfeit some or all of the upside. So currently they're forfeiting all of the upside in QYLD because it's in a bull market. What's happening is the price is going beyond their strike price and they're receiving their premium, but they're losing all the upside potential. Whereas in a bear market, if you did 100% covered call, the investor will likely outperform. Same as in a flat market, the investor will likely outperform as they keep the premium received from selling the call option, and which offsets some of the stock's decline. So if we go over to Global X's ETF page, click on their ETFs, go down to performance, and you click sort by year to date, and then check their covered calls. Right now, they're Russell 2000 or RYLD covered call is a cumulative performance, and I believe that's growth and dividend payout. If you had $1,000 in RYLD, you will have grown with your dividends reinvested and the growth from RYLD 20%. You check out XYLD and QYLG, XYLG and QYLG. Their covered call and growth are sitting at 18% and 17%. The S&P 500 is in a bull market as well as the NASDAQ 100 is in a bull market. So right now they're 100% covered call portfolios. You're still getting some decent growth with XYLD and QYLD. Because of the dividend payout, I believe they're both sitting around 9 to 12. This one might be 9% right now, and this one's about 12%. The reason why the RYLD is so high in cumulative year-to-date performance, if we take a look at the RYLD graph, this might not be a completely flat market. It's still a little bit growth compared to last year. I believe this is sitting at around 9%. If we go back over to their covered call suite explain document. So in a flat market, so let's say RYLD is technically a flat market compared to the NASDAQ 100 and the S&P 500, it says the investor will likely outperform as the markets go nowhere, but the investor keeps the premiums from selling the call option. So right now, their RYLD fund is outperforming all the other funds because the Russell 2000 compared to the NASDAQ and the S&P 500 is relatively flat, where the NASDAQ 100 is on an 18% growth compared to last year, and the S&P 500 is on a 25% growth compared to last year. Now that we understand why QYLG is outperforming QYLD, let's go over to the graph and see why you still might want to invest in QYLD over QYLG. On the first line over here, we have QYLD. Their stock price is $22.28 today. Their dividend yield is 12.21% according to Seeking Alpha. Their expense ratio 0.6. Their monthly dividend payout is 23 cents with an annual dividend of $2.72. And this data right here, this growth in contribution, this figure right here is from the Seeking Alpha data. So if we go over to Seeking Alpha, we see that over the past year, QYLD is sitting at a negative 3.12%. So we'll capture that. Then we check out QYLG, and over the last year, we're sitting at a 9.76% growth. Come back to the chart. We have all these figures inputted into the chart. Say we had an initial deposit of $1,000 with no monthly contribution. QYLG outperforms every single year QYLD with dividends reinvested. But here's where it gets interesting. We go over to the math right here and the tab where everything's calculated. So if we look at QYLD, their dividend payout is going to be more than QYLG. So after 1 year, QYLG will have given you $55 in dividends, and QYLD will have given you $122. And that's with the negative 3% bear market, where QYLG currently is a positive 9%. In the end, your fund balance is going to be a little bit higher because of the growth. And then after year 2, that $122 will be invested in your fund balance. So the only reason why you would want to invest in QYLD is if you're purely looking at the dividends. Now, if you pulled the dividends out, this fund balance would eventually go down, but it all depends on your investing strategy. Let's say you're near retirement and you had quite a bit of money in your portfolio. Let's say you had $1 million in your portfolio and you wanted to compare QYLD with QYLG. We go back over to the tab, and what you're looking for is a dividend payout. So if you had $1 million, your dividend on your $1 million would be $122,000, where compared to QYLG, you would only have $55,000. Now, over 10 years, your QYLG will continue to grow, but if you pulled your dividends out with your QYLD fund, your fund balance would go from $1 million minus your 3%. That's why you have a little bit of a loss here. You have your $1 million plus $122,000 in dividends minus your expense ratio minus your bear market minus 3%, and now you're sitting at $1,081,000 if you had dividends reinvested. Now, if you pulled the dividends out, $122,000, your $1,081,000 would equal, you would only have $959,000 in your QYLD fund. So that might be a reason why you would want to keep your dividends in, but again, it all depends on your investing strategy and where you're at in life. So if you guys enjoyed that video, please hit that like button, and if you want to see more videos like this, go ahead and subscribe to the channel. Leave a comment, let me know what you thought of my analysis. And if you guys want to have access to this calculator and you want to support the channel, you can head over to Patreon, and right now for $3 you can purchase this calculator and compare any fund that you want. And if you stay joined up with my Patreon, every new version that I upload, you'll have access to it, that you can download that new version. I also have a single fund investing calculator, but in this video I featured the fund versus fund investing calculator. Also on my Patreon, you guys can download my free 401k investing calculator, where you get to change the inputs and see what you have over 10, 20, 30, a long-term investment for your 401k. All you need to have is Microsoft Excel, download it, and then you can work with the numbers in Excel. So with that, hopefully you guys enjoyed the video, and thanks for watching.